Well, aloha. Today we're talking about private lending for Hawaii investors. And this is a topic that inexperienced investors actually shy away from at first because they fear they'll lose their shirt on interest rates, And we're going to be talking about key benefits for these types of loans and when to take advantage of them or what to watch out for when using hard money loans for your investments. And today I have a really special guest joining me. His name is Patrick Kell. And private lending is what he does every day. And he's been in that industry since 2011. Patrick is the CEO and president of Kell Capital, which is a private lending company. They're based out of El Paso, Texas, and they do private lending for investors in Hawaii, New Mexico, as well as Texas. Patrick is a real estate investor himself, as well as entrepreneur who started multiple businesses over the years. Now, Patrick and I go way back to his very first investment in Hawaii many years ago when he bought a townhome at Turtle Bay Resort. We've been friends ever since, and we've had a lot of fun working and brainstorming together on his investments, and we always have a great time hanging out when he comes to Hawaii. Patrick, thanks so much for joining me here today.
Absolutely. I'm happy to be here.
Cool. So Patrick, many people have heard the term hard money loan, right? But what exactly is it and how does it differentiate from traditional financing?
Well, the term hard money loan, a lot of people think, oh, hard money means it's hard to get. But hard money actually refers to money being lent on a hard asset, and almost always real estate. And it differs from traditional lending in the sense that there's far less regulation on it from the federal government and from probably local governments as well. Sometimes there's more regulation, though. It can go either way. But I guess the biggest differentiating factors between hard money or private lending and traditional mortgages is hard money and private lending is more geared towards investors. If you go to Chase or Bank of Hawaii or First Hawaiian Bank or Wells Fargo or whatever, you might be able to get investor financing, but it's going to be tough. They mostly focus on consumer lending for mortgages to buy houses and stuff like that. And, with a private lender, you have a lot more flexibility in what can be done in the loan, the terms, the interest rate, prepayment penalties, the amortization period, so many different things. You can become extremely flexible in a private loan, whereas you cannot in a traditional financing. That there are very, very strict guidelines on how a traditional financing has to work, and there's not that case in private lending.
Okay, yeah. So what types of properties or projects are ideal candidates for hard money financing?
It depends on the lender, but for like Kell Capital, what we like to do are cash out refinances. And what that is when a borrower already owns the property, they have a lot of equity in it. Well, in our case, we only take a first lien. We don't take second liens. So when we make a loan on a property, there are no other liens. So they have full equity in the property. We like those because they're nice and clean and simple and easy usually. What that allows the borrower to do is cash out on their property. They still own the property, but they're getting a loan on the equity. And this allows them to go and buy more real estate, open a business, put their kids through college, whatever.
Okay, so it's not just for real estate investors and flippers.
Correct. Not necessarily. That's mostly what we get. But sometimes we get people who just want cash. They want cash to buy a car. They want cash to go on a vacation. They want cash to, whatever. But the fact of the matter is that for us, obviously, it's an investment where we're lending money on the property.
Can you share how this can be helpful for investor flippers?
So we do fix and flip loans as well. First off, a traditional lender is not going to work with you on a fix and flip. It's just way too risky for them. And the way that we do our fix and flips is, every lender is different. Some of them do them amortizing and you have to pay a monthly fee. One of the greatest things about Kell Capital's fix and flip loan product is that we don't charge a monthly principal and interest payment. We only charge a property tax and insurance escrow per month. but the principal and interest is not due until the property is either sold or your note has matured, and it's due in one lump sum. And so that's a
Wow, yeah, that's really unique.
yeah, it is.
To see that.
Yeah, very few lenders do it. Luckily, we're able to, and it's been a great product for us because it allows the borrower to be successful without having to worry about cash flow. Because a fix and flip is not going to cash flow. It's not a cash flow type business. A fix and flip is you do all this work and you're dumping money into it, and then you sell it, and then you get all your money. So to expect a borrower to pay monthly on a non-cash flowing venture is really difficult. So we've done that to make it easier for our borrowers and to make them more successful. And I always say, Kell Capital is not successful unless the borrower is successful. So we always try to make things, to make our loans as success-oriented for the borrower as possible. Because if they don't succeed, then we're going to have problems. We always like to set our borrowers up to be as successful as they possibly can.
That's really unique and extremely helpful to take that burden, that stress off the investor, off the flipper, because that's the last thing that they want to be worried about. So typically, how long can you hold those loans for? Is it 6 months or 9 months or?
We usually do a year. If a fix and flip takes longer than a year, then something's wrong. It shouldn't take you longer than that. If you're a brand new fix and flipper, I get it, and it's going to take you time to jump through the hoops and the hurdles. And and this is important to talk about, we're flexible, because that's one of the most important things about private lending or hard money is flexibility. If you're with a traditional lender and your note comes due, there ain't no flexibility. They're not going to cut you a break. Your money's due. With a private lender, it's a more personal relationship, especially with Kell Capital, because we're a smaller lender. Because there are some really big private lenders, and the bigger you get with anything, the less customer service you get, the less human touch, the human attribute that you get. Yeah, you like to have flexibility, and so
Yeah,
the fix and flip loans are typically a year long, and a good seasoned fix and flipper should get the property done long before that. If it comes to the point where it's a year, maybe the market went bad. We've seen this where we've had very seasoned, successful fix and flippers, but the market was just tough and they couldn't offload the properties, or maybe the property wasn't all that great after all. They couldn't offload it. So we don't guarantee it, but we're always open for the conversation of extending the note for some extra points or something.
okay. Hey, and are there any unique qualifications or requirements that borrowers should be aware of when applying for a hard money loan?
I would say the way you're going to have the most success when applying for a hard money loan or a private loan is just have all your ducks in order. Just have everything ready to go for the lender. This is going to serve everyone the best, and it's going to make your closing a lot quicker. One of the things the biggest question I always get from borrowers is, that is new applicants, how fast can we close? How fast can we close? And I always say that's all up to you. For Kell Capital, if you have everything for us, all the documentation that we need, and you have it clean and readily available, we can close something in like 2 weeks or less, sometimes a week. We've done it in a matter of days sometimes. But we don't see that too often. A lot of times what we see is borrowers coming in, they don't have a financial statement ready. And we don't ask for tax returns or background information like that, but we do ask for a simple financial statement. And sometimes borrowers can't even provide that because they don't really know how, even though we give them the template. So my point is, have your financial statement and your financial kind of outlook ready to go so you can show the lender who you are on a financial basis. Also, if you already have an appraisal, have it ready for us to look at. If you don't have an appraisal, be prepared for us to order one, and you're going to be responsible for those fees. Especially for fix and flips, have a scope of work ready. Have a total clean list of what you're going to do to the property and how much it's going to cost you and how long you think it's going to cost you, and what your profit margin is going to be, what you think your profit margin is going to be. Point being, have as much detailed information about you and the property ready to go.
Okay, thanks. Yeah, that makes sense. Let's get into rates and risks, right? As those are usually two concerns when it comes to hard money lending for folks that aren't familiar with it. And there's always that nightmare. Oh, rates are 12% or like super high. But like, how do interest rates and terms for hard money loans compare to those of traditional loans? And what are some risks associated with hard money loans, and how can buyers mitigate them?
Well, first off, we'll talk about the rates. Rates for private loans are almost always higher than traditional lending, of course. And people always ask, well, why would we use private lending if that's the case? Why don't we just go for the lowest interest rate? By all means, you're welcome to do that, but it's going to be a lot more difficult for you, as we've talked about already, is that private lenders have so much more flexibility. So one of the main reasons that smart real estate investors at least have a couple or a few private lenders in their tool bag, so to speak, is because they know that there are times where the lowest interest rate doesn't necessarily make the most sense. Sometimes what makes the most sense is the flexibility, the ease of getting the money, how quickly you can get the money, and as little regulation as possible. Business people of all kinds, not just real estate investors, I would say are prepared to pay more for less regulation in almost all cases. Regulation is a deal killer, and regulation is a project killer. It's a project stopper. And so when you can pay more to have less regulation and to have more flexibility, that's very valuable to real estate investors. So yeah, you are going to pay more. How much more? I don't know. It depends on the loan product, and it depends on the property. It depends on the borrower. It depends on the market, and it depends on the lender, just what they want to charge.
What's key here for Kell Capital, again, is you're not asking for that monthly payment. Everything's due at the end when the actual house flipper, when the investor makes their profit and has funds then to pay the interest then.
Right, and that's on the fix and flip product. On like our cash outs or you're just kind of typical bridge loan or an acquisition loan or something like that, we do require a monthly principal and interest. But on the fix and flips, we don't. So yeah, again, the flexibility is just unsurpassed when you're dealing with a private lender. And then you also asked about the risks associated with private lending. I would say that the risks associated with the private lending are not any more different than the risks associated with any kind of a loan. You have to be cognizant that you're taking out a loan. You're borrowing somebody else's money to do something that you want to do. So you better be very well prepared to pay it back. If you don't, a lender will take action. And what kind of action does that mean? Well, a lot of private lenders such as us, we don't necessarily report to credit bureaus. We may, if it gets to that point, but generally we don't. You will be foreclosed on if you don't pay your loan.
We talked about the flexibility of hard money lenders, especially like Kell Capital, right? When it comes to loan structuring and repayment options, which is a huge benefit for the investors using your all service. And we've also talked about how hard money loans are a viable option, right, for first-time investors, as well as the more suited, seasoned professionals. One question I have for you is, how do you assess the value of a property when deciding to approve a hard money loan?
Yeah, it depends on the type of loan. And it depends on the type of the property. Is it commercial? Is it residential? Commercial properties are a lot harder to determine the value of the asset because there are so many different contributing factors that can either improve or hurt the value of a commercial property. Residential is pretty easy. We all kind of know what houses are worth and what neighborhoods are worth and this, that, and the other. When it comes to lending on residential properties for us, be that in Texas or New Mexico or Hawaii, we kind of know what they're worth. Now, COVID-19 messed with those values considerably. It made the market less predictable. It made the market just wild, as you know, as a realtor. It's become a little bit more hard, It used to be before COVID-19, when it came down to a residential property, if it were just like a simple cash out or an acquisition loan, a lot of times we wouldn't even require an appraisal because from our own data, our own internal data, we knew what these properties were worth. When it comes to fix and flip, that's more difficult because fix and flip is speculative. You're going off of an ARV or an after repair value. Us as a lender, we're making our loan to value ratio off of the after repair value, not the acquisition value, not the as is value, but the after repair value. And so it's speculative. So when it comes to fix and flip, we charge more interest. We're a little bit more careful because again, it's speculative. A borrower could say, well, it's going to be worth 500,000. I'm getting it for 200 and I'm putting in 100 and it's going to be worth 500,000. I mean, that sounds incredible. You're going to make $200,000. The borrower will say they're going to make $1 million on a fix and flip loan as long as it sounds good to the lender. So we have to do our own due diligence. We get an appraisal on after repair values, and even those are not totally reliable. We've had instances where we've had appraisals and with after repair values, and then, it comes down to the borrower can't offload the house. It's not selling for what they thought it was. And then they're in a pickle. It's tricky with fix and flips. With a good, clean, standard cash out refinance or acquisition, it's pretty simple. We may or may not require an appraisal. Commercials are more complicated, and those appraisals are more complicated for commercial and far more expensive. A residential appraisal is like, I don't know, $500, $600, anywhere between $400 and $600. I would say a commercial appraisal is going to be at least $2,000, sometimes more.
Yeah, right. We see them as high as 800 here in Hawaii bars, and it depends. They're so backlogged at times that they'll sometimes have to order a rush delivery, right? And they'll charge another couple $100 after that.
Yeah. Well, and then the case with appraisals, especially when dealing with a traditional lender and residential appraisals, sometimes when there's not enough data for them, the appraiser, they'll just look at the purchase contract and say, oh, it's under contract for $800,000. The property is worth $800,000. Because in a way that's kind of true also, because just like anything, a car or a house, it's worth whatever somebody will pay. So if somebody's willing to pay $800, it's worth $800.
Great. So, Patrick, I want to thank you for your time today. And before we let you go, I have two more questions that I think would be helpful for the viewers. And one thing I wanted to ask is, can you share some success stories where a hard money loan has made a significant difference to buyers?
Well, I think every good private loan makes a significant change in a borrower's life. They needed that money and they got it, and it was able to make their dreams come true, be it acquiring a property, rehabilitating a property, or so on and so forth. Or like I said, with the cash out, they were able to get money to start a business or to continue funding their business and all these different things. The other way that private lending can be looked at as a success story is, and we have this written on our website, is that with our funding, we have helped improve neighborhoods and communities. And what I mean by that is, especially with the fix and flips, we've all seen it before where you're in a beautiful neighborhood and there's always that one house that is just a dump. It's in disarray. They're not pulling the weeds. The roof is falling through. It's terrible. It's disgusting. And so with our funding, especially for fix and flips, with our funding, we're improving these neighborhoods because these houses are being brought back to life. Here comes a family to live in it, children, pets, whatever. That was accomplished with private lending. If it were not for private lending, that house would still be, like the Munsters house, is just black and gloomy. And, here's one personal success story that I always like to talk about with people. In El Paso, there's a house. We had a borrower years ago, a house that had completely burned to the ground, basically completely burned to the ground. I mean, the foundation was still there and there were some walls that were still standing and the chimney and stuff like that. But the house was completely done. It was gone. This borrower, we had a lot of success with her. So I trusted her. And she says, I can rebuild it. I said, are you sure? Seriously? I mean, this is pretty serious. She says, I know I can do it. We made her the loan. She completely rebuilt this house back from, being a piece of charcoal. And today it's still there. It's beautiful now. And this was a house that was burnt to the ground. I mean, imagine if Kell Capital had not come in to finance that job. I mean, it could have gone another year, 2, 3, 4, 5 years of just sitting there, just charred. So private lending really accomplishes a lot of things in terms of real estate and neighborhoods and people's lives in general.
Yeah, that's right. Well said, man. Well said. So what advice would you give to someone considering a hard money loan for their next real estate investment?
I would say consider private lending because it's going to afford you, again, like we've talked about this whole video, it's going to afford you flexibility. And in my opinion, having done business and not only private lending, I've been involved in numerous other businesses. And to me, what's always most valuable, and I've taken out loans myself too and paid higher interest rates than I could have gotten. Why? Because of flexibility. Me personally, I love flexibility. For myself, I'm pretty rigid with others, but for myself, I love flexibility. I'm selfish in that respect, but I love to have flexibility. And so I'm willing to pay more for that. And I think that's extremely valuable for entrepreneurs, especially entrepreneurs. When you're an entrepreneur, you're out there fighting for yourself and you need as much flexibility as possible. And with real estate, there's always the unknown that could come out. Who knows what's going to come at you in any business, but in particular, real estate investment. And especially in Hawaii, there's so much regulation in Hawaii, and there's so many new regulations coming out all the time, and they're always trying to change things. You need to go in there and ask questions as well. They're going to ask a lot of questions, but you need to ask a lot of questions as well. And when you get your loan documents, a lot of real estate investors, they think, I don't need an attorney. I don't need to look at this, that, and the other. I would recommend getting an attorney to look at the loan documents. Or if you're competent and confident enough in yourself, you probably could do without using an attorney reading the loan docs, but read them carefully, extremely carefully. Read every single word. Know what you're getting into. Know what you're signing up for. Like I said, a loan is a loan is a loan. You're taking out a loan. So always be prepared to pay that loan back, and always be prepared to understand what will happen if you don't pay that loan back.
Right, exactly.
Yeah.
Excellent advice, Patrick. Excellent advice. Hey, well, thanks a lot for taking your time again today to share with us the information on private lending and giving us insight into that world. For anybody watching this video, of course, feel free. Don't hesitate to reach out to Patrick Kell at Kell Capital directly. And Patrick, if you could share, how can people get in touch with you?
The best way to get in touch with us is just go to the website, kellcapital.com. That's KELLCAPITAL.com. Or you can email me at my name at kellcapital.com. I won't necessarily say it right here because you never know. People are going to, there's buses out there that are looking for your interests. But it's just my exact name, my first name at kellcapital.com.
And we'll give a link in the description below too for those that aren't bots that can connect with you as well. All right, great. Well, great seeing you, Patrick. Look forward to connecting with you when you come back and visit in Hawaii.
Absolutely.
All right, take care.
All right. Thanks, dude.